to Geared for Growth. I'm your host, Mike Mortlock from MCG Quantity Surveyors, and today I'm joined by buyer's agent Lauren Jones to talk about Brisbane, which has obviously had a very strong run over the last few years. But markets don't move in straight lines forever, and Brisbane now feels like it's entering a more interesting phase. Buyers are being a bit more careful, investors are asking harder questions, and some of the heat has come out of areas that previously looked almost bulletproof. We talk about what Lauren is seeing on the ground, including the rise in off-market activity, where buyers are still competing, and where vendors may need to adjust their expectations. We also get into the new supply, the difference between good stock and average stock, and why owner-occupier heavy suburbs can behave very differently when the market starts to slow. For investors, the question is not simply, is Brisbane still good? It's whether the particular asset, suburb, and price still stack up. Let's get into it. Lauren Jones, thanks for joining me back on Geared for Growth.
Hello, thanks for having me back again.
All right, let's get serious, which is always something that we struggle with when I have you on the show. I blame you. But let's talk about Brisbane. Brisbane has had an enormous run. Lots of people talking about Brisbane's going to go through the roof because of the Olympics. I don't think that's necessarily the reason why it's done so well. But give us the elevator pitch on Brisbane and what's happened to its market where you are over the last 12 months.
Yeah, a lot's happened over the last 12 months. For the majority of it, it was very hot. You know, you go to a lot of property inspections, there's 30, 40 groups that open and 10, 20 offers, and you know, it'll get launched on a Tuesday, you'll inspect on a Saturday, and then you'll sign a contract by a Monday. But things are slowing down a lot. Probably in the last month or so, they've really slowed down. Rate rises started happening, and that started spooking a lot of first home buyers, I found. So a lot of them are still a bit hesitant. They're not as active in the market. They're not as confident to make a decision. We then also had the war in Iran. So that's kind of created a lot of just uncertainty as well. And then obviously the budget. So all these kind of things has gotten us to this point now where the market is definitely slowing down. The numbers are showing Brisbane to be probably a bit of a better picture than what I'm actually seeing on the ground. I'm seeing a lot of homes sitting on the market a lot longer, you know, potentially a month, even 6 weeks to sell homes that would have sold in a week prior. We're not seeing a lot more listings coming to the market. In fact, sellers are actually quite hesitant to list, but there is a lot being sold off market. And I'm seeing a lot of sellers saying, look, you know, I don't know if I'm going to get the 1.5 that I was previously going to get, but if you bring me a buyer off market, I'll consider selling. So there's heaps off market, still not a lot on market, or a lot of the on market stuff is going a bit stale. Yeah. So technically we've got more stock on market, but it's not really new listings, it's old listings that just aren't really being absorbed very quickly.
It's a difficult time to get a read on the national property market, as journalists like to sort of report on, because you've got Sydney and Melbourne that have been in the doldrums for quite some time, and then you've got Perth, Brisbane and Adelaide that have just been going absolutely gangbusters. We look at the March totality data, it was a 1.8% growth for that month and an annualized rate of just shy of 20%, which is absolutely boom times, right? So it's kind of like a tale of, it's a tale of 5 cities, but, you know, doing very, very different things. The latest print sort of calls into question, well, what is reflected in the data? So like the May data is really probably not going to show any impetus from the budget, but as you mentioned before, interest rates, war in Iran, fuel prices, cost of living. Do you think that has been the reason why it's kind of slowed its pace of growth?
Yeah, definitely. There's a lot going on at the moment, and we've seen this before, you know, when it's budgets or elections or rate rises, people just, they put the brakes on and they just wait to see what happens. So I think we're definitely in a phase of waiting for the dust to settle. And I don't think there's going to be a lot happening over the next few months. I think investors just don't know what to do at the moment. They're starting to seek advice with their accountants, their financial planners, you know, people like myself, but they're not really making moves. Like I'd say since the budget, the tap's almost been entirely turned off for investors in our business. We're starting to get a few inquiries and people just wanting to have the conversation of what do I do? Do I start looking at brand new? Do I still continue with the original strategy? Can I afford it? So I think it's going to be a little while until those investors have the confidence to re-enter the market.
That was going to be my next question. Like we can't necessarily see the impact of the budget in the data, but we can definitely see it in sentiment and the anecdotal stuff that we see in terms of inquiring on properties and conversations with buyers agents. So you're basically saying the investor side of the equation is dead and everyone's kind of reassessing their strategy?
Oh, look, I speak to a lot of other buyers agents, and it's not dead in the water. There's still quite a few people out there that this budget's potentially not impacting, especially those people on higher incomes who never were doing it for the negative gearing or didn't need the negative gearing and still believe in property as an asset class.
Yep.
I think there's a bit of smart money around at the moment. They're seeing it as an opportunity to buy good property with a bit less competition.
Yep.
But I also think a lot of people don't think the changes are going to stick.
Right.
They think either, there's going to be a wind back before they get legislated, or potentially they get legislated and then there's a change of government that winds it back.
Yes. Yeah, well, at the time of recording, they've passed the lower house. They're heading upstairs, where Labor has less of a majority, but I think it would be unusual that these changes don't get passed through. And then it begs the question, well, what sort of resistance have we got from the Liberal Party and what seems maybe even more likely is One Nation in the lead up to around about May 2028, I think is the last point that an election can be called. When you are having conversations with people, what are their main concerns on the investor and the owner-occupier fronts?
I think it's more so not being able to afford it, but I think that's probably what's more in people's heads. When a lot of these people, they could have afforded it anyway.
Yep.
A lot of investors would come to me and they want to spend, let's say, $1 million, but the broker said that they can go to 1.5. So it's not really about affording it. I think people just see it as less attractive. But I also think a time's going to come when people have got, they've got 500 grand of equity, or they've got an inheritance of 500 grand, or just cash building up. And they're going to think, what am I going to do with this money? Everything's been impacted by CGT at this point.
Yeah.
And, do you want to sit your money in cash where it's going down each day, essentially? Do you want to put it in shares? Or do you want to still leverage that into, an investment property? And I think a lot of people will still continue to invest in property the way that they always have.
Yeah, and you mentioned smart money. So of the people that are out and then they're active, are they feeling like, gosh, this might represent a 10% drop in what I might pay outside of this period of negative sentiment and people sitting in their hands? Do they feel like it's a 5%, or is it less about price and more about competition, and they're able to actually be decisive and go, this is the one, and meaningfully accept to be able to get it?
Yeah, well, you certainly don't have to overpay anymore in most cases. Although I've still seen some, auction results or sale results that have been pretty high. But you can essentially buy a good property with only a few other offers, and our negotiation power at the moment as buyers agents, we have not had this opportunity in years to actually be able to negotiate really hard with sellers and get good prices, especially on market. Because what I'm finding at the moment is sellers that are committing to going on market, they're paying the $5,000 or $20,000, whatever it is, marketing fees, staging the property, getting it ready for sale. They're motivated. Either they've already purchased elsewhere, or whether it be health concerns. So those people, they're often happy to take, or well, not happy to take a discount, but they're more willing to take a bit of a discount to get their property moved. But I've been chatting to some agents, and even at the moment, like, they'll list 10 homes for sale and they'll sell 5 of them, or they'll sell 7 of them, and other people are just pulling off the market. So the ones that are motivated, definitely good buying opportunity. I think it's an awesome buying opportunity for a lot of first home buyers as well. But it's funny because first home buyers, they always complain when there's so much competition and, there's 30 people at open homes. But the moment that there's only 10 people at open homes and 3 offers that they're competing against, they pull back as well. This is what you've been waiting for, guys.
I mean, if you listen to the rhetoric of the Labor Party, this is for you. This was designed so that you can have a better playing field to access the property market. So when they're kind of pulling back, it's like, what's going on here? But I suppose something that I talked about on the budget night that is really only just started to be talked about in the media is that we've had this flood of first home buyers across the country with bringing forward their 1 October 5% deposit scheme. But we could actually sort of see a lot of investors or first home buyers that were about to jump into the market and were expecting, well, this will be good because this will actually be part of my wealth creation journey because property prices are going up. They're now looking at potential interest rate rises and property being quite depressed. Anyone that maybe has transacted in the last 6 to 12 months, it's a real conversation about negative equity. Do you think first home buyers are aware of that, and that's maybe part of the reason why they're a little bit hesitant and reticent?
Potentially. I guess everyone's a little bit different, but it's funny. It's one of those things that all the first home buyers, they never want prices to be going up until they've gone under contract on a property, and then they want it to skyrocket. So, I mean, maybe that's creating a lot less urgency, which we're definitely kind of seeing out at the moment. But I think it's just this general sentiment that's keeping a lot of first home buyers out. And it's almost like they need the competition to actually commit and make offers and move quickly.
Yeah, I'm interested in that because, let's just say you've got, and I know everybody is different, but let's try and standardize people, which actually sounds like I'm channeling Nazi Germany. Maybe we'll just put a little asterisk here. But if we think about a first home buyer, let's say it's a couple, ones that come to you straight away and they're like, yep, we've just got our approval, I want your help. And then say another couple who have missed out on 2 properties. I'm guessing that urgency comes from, gosh, it's busy, it's competitive, we've got to get in while we've got this opportunity. But we're not really seeing that because we're not having to pay extra and the competition is diminished. The Geared for Growth Property Investing podcast is presented by our business, MCG Quantity Surveyors. If you're an investor or a property professional looking to get the best tax depreciation deductions for yourself or your clients, please get in touch with us at mcgqs.com.au. It's our mission to help as many property investors as we can to maximise their claims and maximise their property education as well.
Yeah, it's almost like if other people aren't feeling as confident, they're not feeling as confident, and they rethink things and they talk themselves out of it. They don't have as much time. Well, they've got a lot more time now to talk themselves out of it. Whereas previously, view on a Saturday, make your offer that afternoon. Now they've got 2, 3, 4 weeks to kind of talk themselves out of those properties. But yeah, I'm also seeing a good opportunity at the moment for upsizes because, that top end of town has really kind of come off a little bit. But the bottom end is still quite competitive. So let's say, just for round numbers, this isn't really happening, but let's say you're not getting taking 10% off what you could sell for, but you're buying for 10% less than you could have bought for previously. Depending on price points, you could be, saving on dollar value, a couple $100,000 in some cases.
Yeah, well, I suppose if you're selling for $1 million and you're buying for 2 and it's 10% less, there's $100K differential that you're making by upgrading. So that makes a lot of sense right now, but are people plugged into that? Are people realising this is now an upgraders market?
I don't think so. I think a lot of people still get so stuck on trying to sell their home for top dollar without focusing on the discount that they're getting when they're buying in. But it's also a really good market because things have slowed down. There's not as much competition. You can get your subject to sale clauses in again in a lot of cases. For a while, when things were moving so quickly, if you wanted a subject to sale clause in your offer, put an extra $50,000 on it. In the more expensive stuff, put another $100,000 on it. So it's actually a market when you can get access to those kinds of things again.
And how long since you've witnessed the Brisbane market being like that? I mean, it has been on a hell of a run for what is now years, I guess.
So it's the last time it slowed in Brisbane was when rates started going up 13 times. So what was that, mid-year? And then I guess towards the end of that, so I guess back in 2023, the market came back and it just turned very quickly and it just started moving. So that was the last time that we were really able to kind of buy with these conditions. And I mean, even when the Brisbane market dropped from the 13 rate rises, it was about, I think, 3%. So I think if people are concerned about, buying and ending up in negative equity, like we're not in a 13 interest rate rise environment at the moment. Like I don't think it's going to be as bad as that. So, I mean, potentially, it might not be moving as quickly or you might need to weather a bit of a storm, but just kind of hanging in there.
Talk to me about off markets. What's happening with off markets right now? Who are the people that are listing their properties off market? And is it one of those overblown things, where buyers agents say like, we buy 60% off market and, it's a bit more of a marketing spin than actually something that's useful to people? Where are we in the off market sort of sphere?
Yeah. There's heaps of off markets at the moment. I have not seen this many in, probably since 2022. And what it is a lot of owners know that they're not going to get potentially the price that they could have got a couple months ago when things were moving a lot more steadier. So what they're saying to the agents is, look, if you bring me the 1.5 that I want off market, I will sell it. But otherwise I'm not going to spend $10, $20, $30,000 on marketing, staging, deal with open homes, getting the kids, the cats, the dogs out of the property unless I get that price. So there's heaps off market at the moment. They're not particularly motivated and they tend to want absolute top dollar. Now, some buyers agents do use this kind of as their pitch in the business, we buy 80% off market, but I don't traditionally love off markets. I find a lot of the time they are overpriced and the sellers aren't particularly motivated. At the moment, I'm loving on markets because, I think that's where the best value for money is at the moment. The sellers are motivated. They're often prepared to take a bit of a haircut at the moment. But yeah, that's kind of where I stand on that.
Is that across the board, or would you say the lower quartile or the middle or the upper is where there's disproportionately more value to be had right now?
On market?
Yes.
Probably the upper end of town more so, better value, just because there's a lot less competition.
Yep.
But I think as well, it's one of those markets where you see good properties still selling well. So the kind of stuff that we've always been, pushing our investors, functional floor plans, no flood risk, good blocks, natural light, all that kind of stuff. Those properties are still the ones that are moving strongly.
Yep.
Whereas the properties with compromises, they're the ones really sitting on the market. So I guess for people, just make sure that what you're buying that looks cheap isn't just a cheap property that's always going to be cheap. Like trying to find those good properties with little to no compromise that are still you're able to get a good price on.
That's interesting because one thing that I've followed across the markets that have been pumping, like I mentioned before, Perth, Adelaide, Brisbane, is there was a marked decrease in aged listings and what other commentators have called ugly duckling properties that would normally, in a balanced sort of market, be staying on market for quite some time because it's on a main road or it's suboptimal or it's got exposure to floodplains. Those types of properties have been transacting in those hot markets. And if you look at nuts. Yeah. So those properties now, I'm guessing, are a little bit more on the nose, and that's where those properties do sort of seem to suffer swings, quite volatile up and down. If the market is hot, people are desperate to get anything. If the market is a little bit flatter, these things will stay. So you think it's maybe a return to where the quality properties will still transact, but if they're compromised with a lack of competition, we will start seeing an uptick in age listings in places like Brisbane?
Yeah, absolutely. We're already starting to see that. And it's one of those things where, because you're not having to make the decision on the day that you view the property, you've got weeks to potentially make a decision. That's when these people start to talk themselves out of the compromises that present. Whereas, when you view it on the same day, you've got to make an offer. You don't even think about all things, we're on a busy road. Like, what if the dog gets out? We've got young kids. What about the noise? Like, you just don't even have time to process all of that in these really super competitive markets.
And there've been so many markets that were growing by 50K a month. It's like spending a couple of weeks to analyse and have that conversation could cost you tens of thousands of dollars, right? I want to know about what's happening in Brisbane from a government point of view. I suppose the Queensland government and Brisbane local councils are not dissimilar to the federal government, which has basically got this issue about house prices and income price to asset price. Now, Brisbane for a long time was quite cheap compared to Sydney. Of course, there's difference in salaries, but Brisbane now is a market that's been performing so well for so long. Are there issues with the government where they're looking at increasing supply or changing the development control plans to allow for more infill development or granny flats? Like, what's happening at the compliance and government sort of level that you think will influence the market?
Yeah, there is heaps going on at the moment. Most of the city councils at the moment are essentially rewriting their city plans. A lot of that is to kind of combat this missing middle section of Brisbane. Because what you notice in Brisbane is in Brisbane City Council and closer to the city, you've got, your low to medium density units like your 3-story walk-ups. You've got low density townhouses, like small complexes with maybe 4 townhouses in the complex. But once you start getting a bit further out, there's pretty much none of that. And you're just looking at low density housing. Once you start getting a little bit further north, let's say into Moreton Bay, then they've got huge townhouse complexes when you're getting, 50 to a few hundred townhouses in the complex. But in the middle, there's pretty much nothing. So they're wanting to kind of increase a lot of that. Brisbane City Council's doing a few things, or they're proposing a few things like smaller lot sizes. One thing that's up at the moment is we've currently got a rule where if you're within 200 metres walking distance to like a neighbourhood centre precinct, so like a little strip of shops or things like that, you can actually subdivide into small lots, so 300 square metre lots. Even if you're in a low density zone, they're potentially considering increasing that to 300 metres walking distance. And while it's only an extra 100 metres more, that can actually more than double the amount of properties that are impacted by this change because it's a radius. It's not just, a straight line in one direction. So things like that to allow more townhouses, terrace homes, smaller houses. There's a lot going on in the centres as well where there's, public transport and services. So places like Alderley, Stones Corner, they're going to enable much higher high-rise dwellings. Moreton Bay, they're really kind of planning to bring a lot of housing in. Moreton Bay is a bit different to Brisbane City Council because Brisbane City Council is pretty much already done. Moreton Bay, there's still lots of land. So they're really trying to kind of pack as much in, especially around areas, where there's rail, places like Petrie or Kippering. So yeah, I think it's going to change a lot. I think it's going to be good for Brisbane. It's kind of trying to unpack a bit of like the NIMBYism that's been going on for quite some time. Because a lot of these, people in their big homes and their inner locations, now that they're getting to an age when they want to downsize, they're finding that there's not that accommodation that's there for them in the location that they want to be in.
I want to focus on the mission. I suppose this podcast is called Geared for Growth, right? And there's an argument about is there going to be growth in anywhere in the next 6 or 12 months? But for investors that are still hell-bent on investing in property, or maybe they're sitting on the sidelines and they want a little bit of confidence in what's happening. In your patch of the country, where do you believe the opportunities are for investors in the next 6 or 12 months?
I think trying to focus on the kinds of properties that are owner-occupied dominated, because they're the ones that are probably going to be paying the emotional premium over the next 6, 12 months until the dust does settle. So, I mean, personally, I'd probably be steering away from locations like Logan and Ipswich where, they're filled with investors. So I'm loving areas like Brisbane City Council, Moreton Bay City Council, a few good opportunities out in the Redlands as well. And again, trying to focus on stuff with no compromise, potentially trying to, look for these opportunities that are within 300 metres walking distance to the shops because for now, they're going to be sold with the land with no development potential. But the moment that change potentially does come in, the price of your land is going to increase significantly because you can do a lot more on it. But I think Brisbane's a bit more insulated than other capital cities from what's going on in the world We've obviously got the Olympics coming up. What's that? 6 years away now. So there's a lot of infrastructure coming in. We've still got heaps of people moving into Brisbane, and we're simply not building enough houses. As we get closer to the Olympics, the cost of construction is going to continue to increase significantly. So I really don't think that they're going to be building enough houses. Whereas you look at other markets like, Melbourne, they've still been building and they've got
Yeah.
plenty of apartments. Like we don't have many units overall. So, those might start to look like better investment opportunities in, the small complexes in great locations. But I think overall, Brisbane's still got pretty strong fundamentals compared to a lot of other places.
What sort of price point are we talking about in some of those areas that you mentioned, and what does the house look like? And I'm sure that might be different in Moreton Bay compared to some of the other different areas like Redlands. Are we talking units there versus houses? What sort of price points?
So in Brisbane City Council, if you wanted to get a well-located unit, you probably need minimum 800, and that's going to be a bit more of a tired kind of, 3-story walk-up kind of building. Probably, yeah, 900 could get you something decent still. If you want to go a house, potentially something with this, possible subdivision aspect to it down the track, you're probably looking at about 1.3 to 1.6 million dollars. An older post-war home probably sitting on the block. Once we start looking into Moreton Bay, to get a good quality house, even on a small lot, maybe a 400 square metre block, close to amenities, train lines, things like that, probably need at least $1 million. Maybe 1.1. I'm seeing some good opportunities. Like we just bought a good subdivision site in Moreton Bay for 1.1. And that was in the last few weeks, and the market's definitely kind of cooled off. When we went to that, there was no people at the open home, and I think we bought that for probably 100, 150 grand less than what we would have paid a couple months ago. And that's some kind of good opportunities for subdivision where you can do a bit of infill housing. Because I think subdivision, like, small lot subdivisions at the moment, I think they're awesome opportunities, because if all the legislation does go through and the price of new homes goes through the roof, if you could, do the subdivision yourself, sell house and land packages or small lot homes, I think you're going to get a real premium for those products pretty soon.
Those price points are probably quite a bit higher than the average investor budget, which arguably has taken a hit with banks sort of not being able to figure in the negative gearing losses. Does that sort of concern you for longer term growth, or because the point you made before, these are owner-occupy demanded areas, that they will still be resilient and they don't rely on being attractive to investors, or en masse anyway?
Yeah, that's pretty much it. Like I wouldn't be sinking $1 million or $1.5 million into Ipswich or Logan City Council at the moment, and really, yeah, 100% those owner occupied locations.
All right. Well, quite a lot to unpack. And of course, this is a story that seems to be changing every week. We're a little way between things being legislated. We just had our GDP figures, which outside of data centres paint a pretty dire story. Doesn't look like we're going to have interest rates movement for a little while, but it's a bit of a crystal ball and anyone's guess, I suppose. But what do you think investors need to know in closing, Lauren?
I think it's going to be a slow 6 to 12 months. I think the media is going to look pretty uncertain and pretty scary. I think just focus on the fundamentals and, still consider buying those properties, that will perform in any market, and just making sure that you stress tested your numbers. So, if rates continue to go up, what's that going to look like? If, all the negative gearing changes are legislated, what are those numbers going to look like? I probably wouldn't be taking risks in this current market. And just, yeah, making sure you know what you're buying is a good product and you're safe to weather any storms.
Yeah, that's a really good point, because you mentioned property still has good long-term fundamentals everywhere, and especially in Brisbane, your corner of Australia. And if you're a first home buyer, you don't really need to worry what happens in the next year or two, because this is probably a 10, 20, 30-year decision. You just need to know, can I service this? Can I hold on to this thing? Because if you're in a situation where you are forced to sell against what your strategy states, then that's where the biggest concern is, I would say, right?
Yeah, I'd agree, and I'd probably also urge investors don't go running into the brand new stock. I think there's going to potentially be big issues with valuations because the buyer pool of brand new stock at the moment is already pretty much only first home buyers and investors. So if you've then put under pressure and you've got to sell your property in, 0 or 1 to 10 years time, you might not recoup the costs or the losses that you've made on that property.
It's a good point, isn't it? We often get these knee-jerk reactions to policy or stimulus, and you can sort of see there's a lot of interest in the new build, but new build didn't sort of work like that. As soon as you drive it off the lot type analogy where it loses 20% of its value, but it sort of does a little bit more, right? Because it's only brand new once, and the tax settings don't go through to the next owner, even if it's 6 months after that property's been built, right?
Yeah. So I think that's pretty scary at the moment, to be honest. So I would just, urge people to stay away from that, at least for now.
Excellent. Well, thank you for giving us that snapshot of what's happening on the ground and where you believe the opportunities are. It'll be interesting to check in with you in the future, and let's just see how this legislation goes and which government's in power in May 2028. But it'll be interesting to watch that, and thanks for all of your insights today.
Absolutely. Alrighty. Well, thanks for having me.
Cheers.